Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, back home on the Lal Street, the markets ended the week on a positive note, with the key indices ending more than 0.5% higher. The Nifty posted a record close, while the Sensex failed to hold on to the 38,000 mark. The Nifty Bank also reclaimed the 28,000 mark, ending with gains of over 1%. The mid-cap index also ended around 200 points higher. But how the cues stacked up for the day? Nigel will tell us more. Nigel, the global cues look more or less positive, but Asia is now a bit mixed.
Yeah, that's right. Asia is mixed, Anisha, but interesting to see that the SGX Nifty is indicating we're likely to open up with a gain of around 40 points odd. So interesting to see whether or not that happens. But Friday's trading session, we ended with style. The Nifty Bank, both of them put on weight. And what was encouraging was even the broader markets participated. So the mid-cap and the small-cap index did well. In short, you're looking at the flows at the end of the day, and it appears that the institutions, they were on a seller strike. The FIs, they bought 150 crores. The DIs as well bought around 150 crores. Remember, the DI participation was a tad bit lower on the back of, we were mourning the death of our Prime Minister Atal Bihari Vajpayee, as well as we also had a Parsi New Year, and that was in fact, a holiday. So on the back of that, the DI participation on the whole was down by nearly around 10% to around 15%, because the gross buy number was around 3,000 crores. Normally it's around 3,500 to around 4,000 crores odd. But short point, the institutions were net buyers. But if you're looking at the at the premium on the Nifty, that's the only live indicator we have, and that indicated there was some shorting at the top, and that's precisely what the data points indicated at the end of the day. Because now the long positions of the FIs on the index, they've reduced from around 58%, it's come down to around 52% odd, and obviously the short positions as well have gone up. In the last few trading sessions, the FIs have been adding shorts, and that chart as well should come up for you on the screen. They've been adding shorts non-stop. In fact, in Friday's trading session, they added nearly around 11,000 contracts on the short side. You put those numbers together, in the last few trading sessions, they've added more than 30,000 contracts on the short side. But they're hedging themselves very, very well in this market. Because if you take a look at what they did in Friday's trading session, I told you they added short positions, right? So they added nearly 5 shorts for every 2 calls, but 2 long positions. But if you're looking at the calls and the puts, they bought 3 calls for every 1 put. So though they're shorting the index, in case the markets move up, they'll make money on those calls that they're buying. And they wrote 2 calls for every 1 put written. So it's a little confusing actually out there. But if you're just looking at the 11,500 mark, in terms of the calls, some of those, those bears that were trying to protect the 11,500 call, they were adding positions. They seem to have unwound some positions in Friday's trading session. And not just that, the bulls are feeling confident. So there was a lot of addition at around 11,500 to put. There the addition was nearly around 6.5 lakh. Remember, the premium is nearly around 100 rupees odd. So that's telling you that in fact, the bulls believe they can defend the 11,400 mark odd. The key levels you're looking at, well, the 11,495 level, that's the all-time high. So the bears will try to defend that mark. They'll try to put in a bit of a fight. And in fact, the 11,500 call has the highest open interest. So keep an eye out on that one. Heavyweight stocks that we'll be looking at today, Anisha. Infosys, we have, Mr. Ranganath has resigned from the position of CFO. Remember, Infosys has a weightage of around 6% on the index. So that stock should open up on the back foot. So that will put some pressure. But L&T is, surprise, surprise, there's a buyback coming in from L&T. Weightage on the index is around 3.4%. And that's what really could support, the index as well. It'll be ROE accretive. They're using some of that cash. And maybe we'll have to see whether or not this is a sign of things to come. So that should support.
Okay, so a bit of pull and push from the heavyweights like L&T and Infosys, but what about the other stocks? A lot of stocks in focus?
Yeah, let's throw in a couple of more stocks then. Jet Airways, we'll keep an eye out on that stock. Remember, CNBCTV18, we have been talking about how they could, deleverage their balance sheet, how they could cut down on cost as well. And they have replied to the exchanges. They're clarifying on our CNBCTV18 news flash that the company continues to evaluate all possible alternatives to ensure optimum utilization, and in fact they'll make necessary disclosures as and when the need arises. So keep an eye out on that stock. In Friday's trading session, Raymond was one stock. In the final hour of trade, if you pull up the intraday chart, you'll see that the stock ended virtually at the high point of the day. Now, in fact, if you're looking at the derivative markets, it ended the F&O band, so I think you should get the intraday chart up. Keep an eye out on that stock as well. It ended at the high point of the day. It's been a rank underperformer. Let's see what happens out there. CG Power and Industrials, they have said that they've entered into a strategic alliance with Tenaga Switchgear. They are looking at expanding their reach in Southeast Asia Pacific market, so you could keep an eye out on that stock as well. And Ratnamani Metals, not a very highly traded stock, but they won an order to the tune of around 150 crores odd. So we'll keep an eye out on that one as well.
Okay, Nigel, thank you so much for that entire list of the stocks to focus on as well as the market setup. But on that note, let's get in some market opinion from Mihir Vora of Max Life Insurance. He says that markets have held up quite well despite negatives, adds that market might be in for a correction now.
While we do, get impacted by global volatility and flows, we do have a significant good section of the market, which is the IT, pharma and the other exporter segments, which actually benefit from a weakening currency. So we've kind of partly built in a hedge to our markets, and that's the reason why I think the markets have been quite resilient in spite of all the negatives that we talked about, whether it's the Turkey issue or the big number on trade account deficit that we saw for India. And the fact that oil is still at 70 plus levels. In spite of all this, I think we have held up quite well. For India to sustain against that kind of a headwind, I think it requires a lot of continuation of the local flows that we have seen over the last 1.5 years. I think even as we speak, yesterday there was decent FII selling, and of course locals are still buying. So we need this local sustenance for the markets to hold up. Else we might be in for a bit of a correction.
Welcome back. Well, in what could be a big setback for Infosys, the MD of the company has resigned from Infosys, that is CFO MD Ranganathan. Now, he has cited personal reasons for the same, but the expectation is that the stock might open up in the red today. Kritika Saxena joins us with more details on that. Kritika, over to you.
MD Ranganath has been a part of Infosys for 18 years. He has been across very critical teams, and 3 years ago he was appointed the Chief Financial Officer of the company after Rajiv Bansal had put in his papers. Now, why is this exit critical and will give some immediate pressure on Infosys? Infosys has seen many management changes in the last 5 odd years. After the clash between the erstwhile management board and the promoters, Salil Parekh has been brought on. After Vishal Sikka's exit, it took some time for employees, for shareholders to have some faith again, and that hasn't entirely, the issue and the pressures haven't entirely subsided yet. So it is critical for Infosys to have one set of management for at least 5 years to get, for shareholders, for investors, for employees to have that confidence in the company. What are the immediate pressures that we can expect? Attrition is expected to go up because we have already seen after Vishal Sikka's exit about 3 to 4 senior management exits. So after Ranganath, there could be some immediate exits that we can expect. It is critical that the management very soon announce who the next CFO will be. So November 16th is the timeline that they have given till when MD Ranganath will be a part of the company. And the Nomination and Remuneration Committee, according to our sources, has already started looking out for potential candidates. They will look outside as well as inside the company. Internal candidates would be preferred to maintain stability, but if there is a viable external candidate, there will of course also be a positive depending upon who that is. But very, very important to Infosys to give some immediate commentary with respect to maintaining the strategy that Ranganath has laid out with respect to capital allocation, with respect to margin maintainability, and that is going to be something that the market and investors of Infosys will be watching very closely.
Okay, on to another big corporate headline then. India's largest health insurance company in terms of profits and premium, Star Health, is being acquired for $1 billion by Rakesh Jhunjhunwala and a consortium led by Westbridge Capital. CNBCTV18's Yash Jain broke the story on July 20th. Yash is here with all the details. Yash, first up, congratulations on keeping us ahead on this one. But what are the contours of this deal?
Well, after an 18-month-long bidding process, it's finally a done deal for Star Health Insurance. A consortium of Rakesh Jhunjhunwala along with Westbridge Capital have been selected as the final buyers for Star Health Insurance, and sources tell CNBCTV18 that it was a race between ICICI Lombard General Insurance and the consortium led by Rakesh Jhunjhunwala. ICICI Lombard General Insurance had submitted a bid amount of about 5,800 crore, whereas the consortium led by Rakesh Jhunjhunwala had submitted a bid amount of approximately 6,500 crore. Hence, the valuation aspect of the deal going in favor of Rakesh Jhunjhunwala and Westbridge Capital. But do remember that it wasn't just the valuation aspect of it. The current management of Star Health Insurance, led by promoter founder V. Jagannathan, also somewhere wanted to retain the management and the operational control over the company, which is Star Health Insurance, and that could have only been possible if a private equity player or an investor really gets in the company and not a general insurance company. So yes, the management control aspect of it also went in favor of the consortium led by Rakesh Jhunjhunwala. So yes, the final outcome of the deal is really in favor of Rakesh Jhunjhunwala and Westbridge Capital. But we also have with us Nisha Poddar, who's also been tracking that story from the very first point, and she joins us with the finer details of this transaction. So Nisha, what could the new structure post this particular transaction for Star Health Insurance look like?
It's a large investment and a large deal of the largest healthcare company in the private space. So Star Health being bought over by Safe Crop Holdings, which is a consortium formed by Rakesh Jhunjhunwala, Westbridge and a clutch of other investors. 6,500 crore rupees is the total deal size. Before coming to the contours, the biggest significance of this transaction is that Rakesh Jhunjhunwala, the ace investor, will be holding 35% stake in Star Health and in capacity as a promoter. So an investor really putting the skin in the game is going to be holding huge significance when it comes to this transaction. Talking about the contours, 51% with Westbridge, which is investing through an alternative investment fund, which is India-based, so AIF format, in line with the regulations. Madison Capital, 10% stake, and other 4% will be held by Rakesh Jhunjhunwala's associates. They've also kept in mind another regulation that more than 10% stake in the company can be held only through an SPV, and therefore Safe Crop Holdings has been formed by this consortium of investors. In terms of deal valuations, it's going to set a benchmark because very few deals have really fructified in this space. So in terms of price to book, it's 6.8 times, and price to earnings is 38 times. So all that needs to be kept in mind. It's a profitable company and a very large transaction fructifying in the insurance space.
Well, in fact, earlier this year, Shireen Bond spoke to Rakesh Jhunjhunwala about his interest in the health insurance space in India. Here's a quick excerpt of that conversation.
The risk is worth taking, and I can afford the ability to be wrong. That even if I go wrong, my final stability will not be affected. I'll take a bet anytime.
Is there anything on the horizon which looks similar to the kind of bet that you're willing to make on insurance?
There are things on the horizon, but much smaller. I don't have that kind of money to put in so many other companies. And I'm looking at a lot of opportunities, but they're much smaller.
When do you expect closure on the insurance deal?
Who knows? Maybe this month, or first week of July, maybe.
But are you going to be getting your hands dirty with that venture? I mean, beyond just the money and putting the team together?
No, I cannot. See, my idea of life is strategy. And my idea of life is not operations. So, and you can grow big in life with the effort of others. It depends on whom you choose and what freedom they have and what rewards they have. So I am hands up. I mean, I have no capability. Let's understand one thing. Let's not try to do just because we have money. Let's not try to do something for which we are not capable.
Okay, let's slip into a quick break. Up next, Parliament panel calls on former RBI Governor Raghuram Rajan to brief on mounting bad loans. Details on that once we are back.